Hello, welcome to the final class, which is the 10th module for the course Corporate Finance, Corporate Finance, and we'll be looking into contemporary issues and future trends in corporate finance. Contemporary issues and future trends in corporate finance, and in this module, we will look into digital finance and fintech in corporate finance. We also look into the ESG, which is environmental, social governance investing. We will look into globalization and sustainable corporate finance, and we will look into future trends in terms of AI, blockchain, green bond, and impact investing. Corporate finance is the foundation of business, and it's concerned with how companies raise, allocate, and manage capital. However, it's a feed in constant flux. And the last decades has seen a rapid transformation driven by three major forces. The first is the technological innovation, and then the second is the rise in sustainability, and the third is a more interconnected global economy. And we will look into this, as we've said, the digital finance and fintech, the ESG, investing and globalization has the main issues. And we will see how they are not isolated issues, but are fundamentally reshaping corporate strategy. Looking at the first one, which is digital finance and fintech, digital finance is the broad term for using technology to deliver financial services. And think of it as the digitalization of money and transaction. Just think about that, being a digitalization of money and transaction. And when we talk about fintech or financial technology, it is more of specific terms for the innovative solution and complaints that disrupt traditional financial system. And it's the how of digital finance, how it's been formulated, how it comes, that's the how of digital finance. And this shift is a strategic imperative, for any modern corporation, and it affects a firm's competitiveness, its ability to operate with transparency, and the overall efficiency. And also, fintech's impact on capital raising. How if a company needs to actually raise capital, what's the impact of fintech? Fintech is democratizing the process of raising capital, making it accessible beyond traditional bank and venture capitalists. Options that are available include this crowdfunding platform like the Kickstarter or GoFundMe, which allows companies to be able to raise funds from a large number of individual investors. And this is a powerful alternative for startup and small businesses. Also, we have the initial coin offering, and the security token offering, which are new fundraising method that use blockchain technology to be able to issue digital token to investors. While still evolving, they represent a significant innovation in capital markets. We also have the peer-to-peer lending platform, which directly connects borrowers with lenders, bypassing the need for traditional bank as an intermediary. Looking at fintech in corporate operation, beyond fundraising, fintech streamlines day-to-day corporate financial operation, and in terms of payments and transactions, that digital tools like mobile wallets and blockchain-based payment system make transaction faster and cheaper, eliminating the friction of traditional banking. Also, another aspect is the treasury management, and with cloud-based software and predictive analytics powered by AI, companies can now manage their cash flow and liquidity in real time, forecasting need and optimizing capital. And lastly, the financial analysis, that is AI and machine learning, can analyze vast amounts of financial data to be able to identify risk, forecast market trends, and also optimize investment portfolio with a speed and accuracy that manual analysis can not match. We move to the ESG investing, the rise of ESG investing. And when we talk about the ESG investing, it's a practice of integrating the environmental, social, and governance factor into financial decision-making process. And it moves beyond just a company's financial performance. And the E stands for environmental. And this is a pillar that considers a company's impact on nature and its management of environmental risk, such as climate change, carbon emission, and resource depletion. Also for the S, which is the social, this focuses on a company's relationship with its stakeholder, including employees, customers, supplier, and communities where it operates. The governance aspect, which is the G in the ESG, is the pillar that looks at how a company is led and managed, and it covers topics like corporate board diversity, the internal ethics politics and policy, and the likes of executive compensation. Why ESG is a financial imperative? ESG is no longer a nice to have, but a strategic necessity, and it is about long-term value creation. And why is it imperative? And by analyzing ESG factor, investors and firms can identify and mitigate long-term risk that traditional financial statements may not reveal, like the risk of future climate regulation and social unrest. Another reason is capital raising. Companies with strong ESG performance are increasingly attractive to investors. This can lead to a lower cost of capital and access to specialized financial products like the bond and or social bond. And another reason is valuation. That is, firms with high ESG rating are often perceived as more resilient and sustainable, which can positively impact their overall valuation and share price. Another issue to be considered in the third issue is the globalization. And when we talk about globalization, it has a force in corporate finance for decades, connecting financial markets across borders and creating a single integrated global economy. And under this, we can bring out the cross-border capital flow. And this deals with firms can now raise capital by issuing security on foreign exchange or selling euro bonds, which are bonds denominated in different currency from the country in which they are issued. Another aspect is the financial market integration. And for this, while this has created new opportunity, it also means that economic shock in one country can rapidly spread, as seen during the 2008 financial crisis. And the last aspect we need to look in globalization is the influence it has is the risk management. Operating globally exposes firms to new risks such as foreign exchange risk and political risk, and this makes tools like hedging and diversification essential components of a new financial strategy. Let us bring this together as a trend. The future of corporate finance exists at the intersection of these three major trends. When we talk about digitalization, we talk about environmental, social and governance, and when we also talk about globalization. These three are very important and they do not operate in solos. Digitalization accelerates the speed of capital flow and financial transaction on a global scale, while ESG principles are becoming integrated into the core of financial models, influencing capital allocation and risk management decisions for global firms. And lastly, globalization necessitates that firm financial decisions are not only profitable, but also socially and environmentally responsible on a worldwide stage. In conclusion, the world of corporate finance is undergoing a fundamental shift. It is moving from a focus solely on maximizing short-term profits to creating sustainable long-term value for all stakeholders. And we can see that it is not just about profits, but also having sustainable investments in the company. And the modern financial managers must possess a diverse skill set that includes not only traditional financial analysis, but also a deep understanding of digital technology, sustainability metrics, and global market dynamics. And the goal remains value creation, but the path to achieving it has become more complex, interconnected, and globally aware. Thank you for listening, and I would like that you go through the course one after the other again, take the notes and read for further understanding. Thank you.